Welcome to Klaus Sin Live, where we interview agents, leaders, and influencers who are making and made a big difference in our lives and our clients' lives and for us agents as well. My name is Klaus Sin. I'm with the Sin Group at eXp Realty, and today I have the honor to interview Kevin Coleman, who is a senior loan officer with SWBC. And Kevin is a good friend of ours. We we have him in our he does all our family mortgages. I think we're working with him since over 10 years. And I need to say, Kevin have saved many of my deals where I was the listing agent and other buyer's agent brought in the buyer and they were pre-approved with a lender. And then just when we go towards the closing, the deal fell apart because the lender didn't want to close anymore. So I got Kevin in the transaction and he was able to save the deal for me, as I said, I don't know how many times. So before we get started, let me get through the intro and then we'll get right into it. So, Kevin, welcome to our show. I appreciate you taking the time out of your busy day.
Well, thank you. I appreciate you having me on.
Cool. So, Kevin, I think we know each other for more than 10 years now. I think it's amazing how the time flies by.
Yeah, that's pretty
And
crazy.
and let's tell our viewers a little bit about you. I think how long have you been in the business?
Yep.
What actually started your career in the mortgage industry?
So I've been in the business since 2006. So 16 years. I graduated from the University of Central Florida, UCF, in '06 with a degree in finance. And like my last year, I took a mortgage financing course. And I don't know why, but it clicked really well with me, and kind of a combination of crunching numbers, helping people purchase homes, helping people get good financing, customer service behind it. It all kind of blended in, and that led me to where I'm at today.
Cool. Well, that has been 16 years ago.
Yeah, 16
So,
years now.
so if I remember right, and correct me if I'm wrong,
Yep.
but so you started a mortgage career at a time when the whole market really collapsed.
I did, yeah. I started in 2006 actually, with Nation Star Mortgage as a wholesale account executive. They were in subprime lending. So I kind of did things backwards where a lot of other people start. I sat with an underwriter and an operations team for my first 6 months there. And then afterwards, they gave me 40 approved broker accounts, and I went out and picked up wholesale business for them. It went really great in '06 and '07. And then come September of '07 is when they pretty much shut down that division. And that's when I went on my own. I figured I might as well get licensed and start doing loans on my end so I'm not dependent upon somebody else.
How did that work for the first 2 years? I think in
The,
2008, you couldn't even get a loan, if I remember. It was just a
no, it was
nightmare.
tough. I mean, the thing about it was a lot of people who were doing loans at that time weren't that educated in underwriting, because you could just basically have a credit score of 640 or above and get 100% financing up to, I mean, when I was at NationStar, I remember we do up to a $500,000 loan amount, 100% financing if you had a 640 credit score stating
Wow.
your income. So I I kind of had the benefit of sitting with underwriting and learning everything in terms of, what they're looking for to approve, what you're looking for in a, credit profile and everything else. So it was like a big upper hand in '08 and '09 when the competition that I had basically just was so used to, okay, your credit score is this, go with this person. It was really beneficial to me.
Yeah, I think that really was a tough for them because it reminds me really on the last 2 years in real estate business, on those last two
Yep,
years where you have a license, you got business because people want to buy houses, right? They just
absolutely.
come at you, and yeah, same way then. I remember we got back in 2009 as well after taking an absence for a few years,
Yep.
and it was a total different world. So I think you had a great education at that time.
Yeah, it
So
was beneficial actually.
right.
Surprisingly, it worked out really well.
So since then, a lot of things have changed. I mean, obviously,
Yep.
the whole banking industry has changed. The way people finance have changed. But also in the last, I would say in the last 2 years, things relaxed a little bit again. So what would you say? How has your business changed from that time in 2009 and today? I think most people still say mortgage brokers. I think there are no mortgage brokers anymore, right? Or
Yeah, it's just really difficult to be a broker with, I personally, I've had people who have wanted to go out and become brokers on their own and do lending on their own. And it's just, I've found that working for a company like SWBC Mortgage, who I work for, who's a larger direct lender who does the underwriting, the processing, the funding, all in house, basically services the mortgages afterwards. So you're kind of with me from the day you get your loan until, whenever you actually pay off that loan. So I found that that's a lot easier. Things move a lot faster. You're not dependent upon other people, and you kind of control things because I'm sure we'll get into it's really important quick turn times to make everything work out in today's market.
yeah, and I think from my experience, I think when I talk to a buyer, most of the time they shop for mortgage. All they're looking for is the rate, and
Yep,
I think that's a very misleading way to go because you can explain that better than I do.
it is. I mean, here's the thing. Pretty much all of us are writing our loans and securitizing and selling them to Fannie Mae and Freddie Mac. So all of our interest rates and costs should be very similar to one another. You might be able to call up 15 different mortgage lenders and get a difference in interest rate by an eighth to a quarter percentage point on the top end. Costs might be on the high end $500 difference between the two. There's some that might be a lot higher than others. I personally have always worked at a place that I feel is extremely competitive with interest rate and costs and everything else versus what's available out there and such. But more importantly, sometimes having the best interest rate will in no way, shape, or form secure you getting the home under contract because working with a local lender who's extremely knowledgeable, who can turn things really fast, in a lot of cases will win over the seller, especially when you have a knowledgeable, real estate agent who's helping you with the listing agent to get the home under contract in itself.
Right. I think you mentioned something about being a direct lender. I think most people don't even know what that means. I think we
Yep.
do, but the
Yep.
home buyer really don't understand the difference. Can you explain that?
Yeah, absolutely. So being a direct lender means when you come to a direct lender for a mortgage, that's actually who's going to process your loan, underwrite, which means approve your loan, and then fund your loan in house. So it's all going to be at the same place. It's not going to be you're using someone to get a loan, but they have to depend upon somebody else to process it, somebody else to approve it, and then somebody else to fund it. It's all in one when you're a direct mortgage lender. And that really strengthens the speed on how you can get things done from start to finish as well, along with like when I issue a pre-approval letter, I know that I'm pre-approving somebody who's going to get approved for a mortgage with SWBC. I'm not issuing a pre-approval and then hoping, hey, maybe somebody else will do it when we get to that point. And it
And,
makes
and
my pre-approval letter a lot stronger.
and that is really, really important for a home buyer. More important that they actually know. We as the real estate agent, I think we're competing. We're really not competing against other buyers. We're really competing against other agents who have offers on that same property, right?
Yep,
So,
absolutely.
so we need to come in and tell the listing agent, hey, here's a reason why you should consider our offer against the five other offers you have. And there's a way to structure a finance offer uh, that it actually has an advantage over a cash offer, at least in my opinion. And you need a lender that can go ahead and say, here's an approval letter. The client is ready to get financing. We can have a commitment in 10 days. We can close it in 2 weeks. I mean, you cannot do any better as a cash offer. The
No, you can't.
right,
A cash offer, really, the only thing a cash offer can do is the same thing that a financed offer can do, is waive, an inspection contingency and things like that.
Right.
And they're not going to do that.
And
We
that's really a bad idea.
Yeah, that's a terrible idea. So you
Right.
definitely wouldn't want to do that.
And I think that a lot of cash offers today are not really cash offers. It just means there is no no finance contingency.
I do too. Absolutely.
But would you agree that since it has become very competitive out there, that in my opinion, the finance buyer, if he gets approved and he's going through the inspection and the inspection works out okay, the likelihood that he walks away is just almost zero.
It is
While a
0%.
cash
There,
buyer
yeah.
maybe put in 5 offers on 5 other properties and
Oh,
he
absolutely.
plays the game,
Definitely.
right?
Yep.
Yeah, yeah, I totally agree with that.
And they do
So,
too. I mean, we see it all the time.
right. So now we talked about before we get live about interest rates. I think interest rates went up there. I don't know, around 5-6% right now.
Yep.
And for the agents who are in business in just a few years, all they know is 2.5-3%, right? So they're all
Yeah.
freaking out. Oh my God! But you and I, we know interest rates were a lot higher. We're
Yes.
actually not. They're
I
not
mean, when I
high right
first
now.
started, interest rates, if you were doing non-agency subprime loans, you could get interest rates as high as 8 or 9%, and people were still buying houses left and right. There wasn't anything holding them back. I've seen interest rates as low as the low twos. I've seen them as high on agency products, and not, which agency means a normal conventional loan, as high as the mid sixes. And I've never really seen it slow down real estate itself.
Yeah, I remember when they were up 14-15% and people still were buying houses.
Yep.
It will have an effect on the price, but we're still going to have houses going, right? So,
Oh,
so in,
absolutely.
what would you tell somebody today who is thinking about buying a home but isn't sure because the interest rates are high in their opinion and they're holding off? What would be your opinion
Well,
being
this
in
is
that
this is
business?
going to be my saying probably forever and then some. If you find a home that you like and the price is right and you're comfortable with the payment, no matter what the interest rate is, you should buy the house, because real estate has always been proven to be a phenomenal long-term investment.
Right.
So whether an interest rate be 3% or 6%, if it's the house that you want and the price is right and you're comfortable with the payment, I highly encourage moving forward, because 5 years from now, there's a very, very high probability that house is going to cost a lot more than it did today.
Yep, absolutely. I actually just looked at a new website that somebody created with algorithm for different zip codes, and they predict how much a house costs in 3 years, and 5 years, and two
Mm-hmm.
years. And I was looking up our Palm Beach market where I live, and in 3 years my house is going to go up 25%. That's
Yeah.
a 90% likelihood, right?
Yep.
So the interest rate is not really that important
And,
as
and
long
I
as
hear a
you.
lot too. A lot of people worry, when I'm on the phone with new potential home buyers, they worry that, well, is the housing market overpriced? Do you feel like a crash is going to come? And I mean, I've seen one crash in my lifetime, and the result of the crash didn't have anything to do with higher interest rates or higher prices. It was just, I believe, over speculation, to where that
Right.
you had the same person purchasing 5 homes and they could do 100% finance, and if without income verification, it was pretty simple to do it. To whereas nowadays, we do a very thorough application to make sure you qualify for the house prior to putting you in the mortgage.
Right. Now another thing is right now, and I'm pretty sure uh, you tell me if I'm right, but I think nationwide the market is shifting. There's no doubt about it. That frenzy has slowed down, and nationwide, I saw last month there was a 14% decline in home buying, but it doesn't apply to Florida, it doesn't apply to Texas, it doesn't apply to Pennsylvania right now.
Mm-hmm.
Those markets actually went up again more. And what I'm seeing right now out there is that okay, we're not getting 10 offers anymore on an overpriced home, but if the house is priced right, and not meaning lowball, but if it is priced to comparable sales, we'll still get multiple offers. which means the demand is still there. And
Oh, absolutely, definitely.
right. And
Ye-
secondly, what I see that especially Palm Beach County and maybe some other areas, South Florida especially, that we have no inventory. That's not going to change.
No, we have extremely low inventory, and when a house is priced right to sell, there's still going to be multiple offers on that house day one. It's
Right.
not going to sit around.
Now,
If
go ahead. I'm sorry.
I believe if a seller overprices their home in the beginning, it's extremely difficult for them to get multiple offers right away because we all, I mean, a great realtor like yourself will advise your client this is what they're selling for, and
Yeah,
this is what. So
absolutely.
it it's kind of, if a home's priced right to sell and you want it, it's going to sell. So you got to come in strong with your offer.
Yeah, I totally agree with that. I think if sellers overprice today, they're going to lose at the end. That's totally my opinion.
They are, because it's going to sit on the market for 45 or 60 days. People are going to ask why it's sitting there. They're going to have to do
Yep.
price reductions. It's not worth it to overprice.
Well, if I see a property is on the market after 30 days, my offer is going to be quite lower than the listing
Oh,
price. That's
absolutely,
no doubt.
definitely.
No
Yep.
doubt. While on the first day, I'm going to be up. I mean, that is
Yeah.
normal.
Oh,
Right?
definitely.
Now, I want to talk for a moment about the products you offer. Um,
Yep.
Many times I think in today's market, mostly many younger buyers, they want a place where they can move in. They don't really want to do a lot. They're ready to, to buy a new home. Most of the time, they don't really have that much extra money left so that they can buy something that needs some work. And you and I, we have done quite a few
Yep.
2 or 3K loans
Oh, absolutely.
over the time, and explain what that is, what that means.
So we offer, there's FHA 203K financing. And just to go through just two others, there's also conventional renovation financing. It's called home style renovation. And we even offer a VA renovation loan. So you can purchase a home and include a certain amount of repair work, renovation work into the house in the new loan amount, as long as it appraises at a certain level based upon the amount that you're going to buy it at. So, like, for example, if you're buying a house for, let's say, $350,000, and the kitchen needs new cabinets, needs new, countertops, or let's just say the home needs a new roof. On an FHA loan, you can do the loan up to above the appraised value to include renovations for certain items. On a conventional loan, it does have to appraise high enough to make it all work, but they do base the appraisal off of the improved value with the renovations versus the existing value, which always helps to get the home appraised a little bit higher than what you're actually purchasing it for.
Right. So instead of just looking for the perfect home, which really doesn't exist,
Yeah,
um,
that's tough to
we,
find.
we could go back and say, well, let's look at something that needs some work, right?
Yeah,
And you
definitely.
get a 2 or 3K financing. That means you finance everything, and we can have a contractor come in after closing and go ahead, put a
Yep.
new roof on, put a new kitchen in, and get it the way you want it. You want
Yep.
it, and you have a
Absolutely.
perfect home, and you maybe even save some money at the end because those homes sell for less. I mean, there's no doubt
Yes, they
about it,
do. Correct.
right? Cool. Um, what other
There's
loan
one
products?
other. There's a good one, actually. Sorry to interrupt.
No,
That's come out recently. It's called the Hometown Heroes program. That's available statewide in Florida. So this program is offered on either conventional loans, FHA, or VA loans, and you can get up to 5% of the total loan amount to help pay towards down payment, closing costs, or prepaid items. They cap it at $25,000. So, for example, if your loan amount was $501,000, it would still be capped at $25,000. And it's geared towards certain occupations. The Hometown Heroes program is available, just for an easy example, for teachers, for law enforcement, for veterans, medical prof. There's a pretty good list that once I speak with you, I'd go over it with you and such.
right.
But it's a really good one for first-time home buyers as well, that offers a lot of assistance to help purchase a home. Veterans especially, because a veteran could do 100% financing with their VA benefits, and then they could use the Hometown Heroes program to pay a portion of their first loan amount down, pay all their closing costs and prepaid items, and basically get in the house for very, very little money out of pocket.
That is a pretty cool. That is pretty cool program. I like that.
Yeah,
It
absolutely.
brings me to my next question. And many people try to put 20% down to save on the PMI, uh, and what I run into problems once in a while, or I did run into problems once in a while, that the house doesn't appraise. They need a few $1,000s extra. Now we're over the 80%.
Yep.
And what can be done to avoid that?
There's a lot of options, especially if you're doing conventional financing. If your credit score is really high, 740 or above, for example, PMI in the monthly payment, like on a $500,000 loan, it could be as little as $100 a month. I mean, you're talking on a $500,000 house, 5% down is $25,000 out of pocket to pay as little as $100 monthly, versus putting $100,000 down just to eliminate that $100 monthly part of the payment. Right. There's buyouts to where that you can do finance premium and increase your loan amount by a certain amount and buy out the PMI for the life of the loan. There's lender paid PMI to where that your interest rate might be slightly higher, and that'll buy it out for the life of the loan. I go over all the options and figure out what fits best.
So if that is a situation and somebody runs into that, there is options.
Oh, definitely. Absolutely.
Important for the buyers to really address that and talk to you about it.
Definitely.
So that they know what they do.
Yep. And like, for example, if you were wanting to do 20% down, you might look at doing 15% down, and then the buyout of the PMI might be a very, very small dollar amount. You can include it in your loan amount, keep the 5% in pocket to do whatever you want to do to the house when you're purchasing it afterwards to get it exactly where you want it to be. There's a ton of options that you just don't need to put down 20% to avoid PMI.
That's awesome. I'm going to post your phone number, if that's correct, okay for
please.
You, in under the videos, and so people can contact you directly. Any last words before we wrap it up?
No, just definitely please feel free to post my information, contact me directly. I'm always available by phone call, text message, my office phone transfers to my cell phone, email, and I'd be happy to assist and work with you for sure. And
I can add to that. So we have worked 10 years. I really don't work with nobody else because I know one thing I forget to say with the importance about getting a contract approved or winning against another contract. It is extremely important that when you talk to the listing agent, say, I got to finance pre-approval letters with Kevin Coleman. Those people who were in business for the last few years, it's pretty normal that they know you because you have been in business for so long and do so much that the agents know you. And I heard it more than once. Oh, Kevin is doing the loan. Okay, I'm good with that.
Thank you.
You come out with, and I don't want to, badmouth Bank of America or Quicken Loans or whatever, but those pre-approval letters don't mean nothing anymore to agents because they know they're computerized. They don't mean anything. So I just want to throw that in so people understand that. And
well, thank you. I appreciate that. And I'm always more than welcome to contact the listing agent on your, their behalf and your behalf. Go over credentials to make sure we can win the offer for sure.
Yep. Awesome. Well, I appreciate it. I appreciate you being here and taking the time. And
thank you. I appreciate you having me, Klaus. Absolutely.
Can't wait for the next deal.
Thank you. I'll be here.
Okay. Bye, Kevin.
All right. Thank you.